was Dr. M. Sathya Kumar. Before he starts the deliberation, I would definitely like to give a brief about his background. He has such a long list of qualifications that does not come in one screen or one mobile screen. So he is LLM, ACA, ACMA, ACS, CMA, ACMA UK, CMA US, MA Economics. That is something which I share with him, and then PhD. And he's an advocate with the Supreme Court of India. And I have had the privilege of listening to him and being associated with him also earlier. He's an advocate member of this Chartered Accountants of India, ICAI, Cost Accountants, and CA Company Secretaries of India. And those were included in his degrees only. And he's a chief mentor and administrator of Rajnikant Foundation, which human excellence and philanthropic organization started by Padma Vibhushan superstar Rajnikant. And Rajni sir affectionately calls Dr. Sathya Kumar as Baba Saheb Dr. B.R. Ambedkar for his ideas for social transformation. So Dr. Sathya Kumar regularly meets Nobel laureates, His Holiness 14th Dalai Lama, to discuss on business as an instrument of social transformation. And Dalai Lama named him as Tenzin Shikha. That's great information. So you have a very huge profile, but I know our members are really looking forward to hearing from you, Dr. Sathya Kumar. So I would request you to start your deliberation so that our members can benefit from your huge knowledge and expertise in this.
Thank you, Rupanjanidhi. It's a great pleasure to address the members of the Institute of Company Secretaries of India. Thanks to Ministry of Finance, Government of India. Special thanks to Smarak Swain, IRS and officer at the Ministry of Finance, and Mr. Ritvik Pandeyji, IRS. Am I right? IRS Ritvik Pandeyji?
IAS.
IAS, yeah. So thank you so much. It was a wonderful insight, because moment the notification was issued on May 3rd, 2023, and subsequently one more notification came in May 9, 2023. The next day, the headlines of the papers were very, very alarming. And in fact, what I understand is that without getting into the details, many of the newspapers went on to report as though CA, CWA, CS is covered under the Prevention of Money Laundering Act, without understanding the objective based on which they have been brought under the notification. First thing I wanted to clarify to all the members who are attending this program online is that, having understood the professional ethics code and also the acts of the respective institute, and appearing for so many disciplinary cases of the members, I could tell you CS, CA and CWA as such, that is cost and management accountant, as such are brought under this notification only for the purpose of meeting the reporting obligation. So this is what I wanted to clarify. And in fact, for providing a background to this, the Ministry of Finance has clearly provided the presentation just before my presentation. They have listed out what is the purpose of Prevention of Money Laundering Act. In fact, they briefed about Financial Action Task Force, and to understand the brief about the FATF, the Prevention of Money Laundering as such is a global call which has been for many decades. In fact, in 1988, if I'm not wrong, 1988, there was a Vienna Convention that happened, and where the intergovernmental organization and governments discussed about how to combat the money laundering activity, which was actually triggering terror financing, and it was actually national security issues for many countries around the world, even for the developed nation. Following it up, there was a Financial Action Task Force. The objective of the Financial Action Task Force was primarily to combat money laundering and terror financing and adopt and implement appropriate measures globally to see to that these activities are not carried out, and to ensure that the countries mitigate this risk and over a period of time completely avoid the risk of money laundering leading to terror financing and other illicit activity. And there was establishment of European Council and Organization for American Estates and Council of European Convention, followed up by United Nations global program against money laundering happened. And because of all this development that was happening, India was watching it. And in the year 2002, India brought out a regulation called Prevention of Money Laundering Act. Prevention of Money Laundering Act 2002. To understand this act, before Prevention of Money Laundering Act was there was Foreign Exchange Regulatory Act, which became Foreign Exchange Management Act in 1999. As such, from the perspective of income tax was taking care of the investigation, and from the perspective of course, service tax was introduced in 1999, and indirect taxes department was taking care of the same. And considering the money laundering activity was the global call, India passed this regulation in the year 2002, and it became effective from 17th January 2003. 17th January 2003, it was enacted by the Government of India on 17th January 2003, and it became effective from July 1, 2005. From then on, the role of Enforcement Directorate started evolving, and one of the best officers around the world were brought under the Enforcement Directorate to investigate crimes which are listed, scheduled offences which are listed under the Prevention of Money Laundering Act. And even Enforcement Directorate also investigates offences under the FEMA Act. So we have to understand the money laundering has two important things. One is money laundering happening in the domestic level. Second, money laundering happening at the international level using foreign exchange as well. So considering all this development, India was notifying from 2005 onwards, Indian government was notifying reporting entities like banks, NBFCs for the purpose of getting the information, transaction information. And there was a clear-cut reporting framework that was evolved by the government of India, and we all know about the role of the Financial Intelligence Unit of the Government of India under various reporting obligation. And there was a thumb rule like if there is a transaction of about more than 10 lakh rupees that has to be reported, and many more other reporting obligations were provided. So the clarification that every professional who is watching this program, especially the members of the Institute of Company Secretaries of India, is to understand that company secretaries are not covered under the Prevention of Money Laundering Act with respect to the professional work that we do. So very, very important to understand. With respect to the professional work we do, with respect to rather the core services of the company secretary in practice, core services of the cost accountant, core services of the chartered accountant is not covered under the May 3rd notification, May 9th notification. It's very, very important. May 3rd notification talks about financial transactions. May 9th notification talks about various activities, of course leading to financial transactions. In the May 3rd notification, let us first deal with May 3rd notification. CAs in practice, CMAs in practice, CS in practice is covered, but what is covered is not audit service. What is covered is not secretarial audit. What is covered is not cost audit. Please understand, the core professional services of the members of the institute is not covered under the notification issued on May 3rd, 2023 by the Department Revenue, Ministry of Finance. What is covered then? Very, very important to understand, because what was actually bothering me, next day when this notification came, all the newspaper, most of the newspapers I would say, started reporting saying that CA, CMA, CS are covered under the Prevention of Money Laundering Act. So Prevention of Money Laundering Act has various dimensions. So they should clarify under which dimension they are covered. So rather they went on to report saying they are covered. So it is basically, before even I dwell into the details of the notification, I am making a clear understanding to all the members that everybody should understand that core services of a professional are not covered under May 3rd notification as well as May 9th notification brought out by Department of Revenue, Ministry of Finance, Government of India. My dear friends, then what is covered? My dear friends, over a period of time, the Government of India understood professionals other than the core service areas, they were involved in many other transactions, many other activities. Those non-core areas are covered under the May 3rd notification, May 9th notification. This is what you should understand. Covered under what? In fact, this notification is actually a saving aspect for a professional, because whenever money laundering crime is reported, immediately even enforcement directorate goes and looks back who is the professional, who was his auditor, who was his company secretary, who was his cost auditor, and who is other professionals who are helping him. Then in that case, with this notification, what's going to happen for the professional, even before the enforcement authorities or even before the transaction could happen, if any of these transactions where you are already involved, in that case, you are going to report to the FIU, that is the Financial Intelligence Unit. Accordingly, you are going to save yourself from the liability. You are going to save yourself from the liability. So rather, every year or every periodically, there is going to be a reporting obligation for the professional. Accordingly, all those transactions which are entered by the professional, that is non-core practice areas, if at all if you are entering, the notification does not prohibit the professional. Please understand, as per Article 14 of the Constitution of India, none of the notification can prohibit a professional from entering into any kind of consulting activity or any kind of activity. All that this notification does, if at all, if you are carrying out any financial transaction or activity and it is notified under the May 3rd notification and May 9th notification, then the same need to be reported to the FIU. That's all. So what is being stressed upon in this notification is that professionals has to report the transaction and the activity. Now let us see, as per May 3rd notification, what are the transactions that is covered. First transaction that is covered as per May 3rd notification is that buying and selling of any immovable property. I was seeing the analysis presented by Mr. Smarang Swain. It was an excellent analysis where he went on to highlight that real estate transactions are the high risk prone areas for money laundering. Absolutely true. Because today, if at all, if the illegal money or dirty money or illicit money has to be laundered, the people mainly use the real estate, that is the immovable property, for the purpose of laundering. Accordingly, it is definitely a high risk because that is the area to be watched for. And many a times the professionals help people in buying and selling. Accordingly, if you may note, the role of a company secretary, the core practice area is definitely not buying and selling of immovable property. But of course, if a company secretary is doing this transaction, it does not penalize. The notification does not penalize. The notification does not criminalize. The notification does not prohibit the company secretary or chartered accountant or cost accountant from entering this activity or this transaction. But it only says, if at all if you are engaging in buying and selling of immovable property for a client, then report this for the purpose of Prevention of Money Laundering Act, Section 2, Clause SA 6 of the Prevention of Money Laundering Act. The second transaction which is covered under the notification, May 3rd notification, is managing of client money. Managing of client money, securities or other assets. Very, very important. Managing of client money, securities and other assets, management of bank, savings or security accounts. all these transactions are covered under the May 3rd notification. Even now you can check the core activity of a company secretary or a chartered accountant or a cost accountant definitely will not be as if they are holding certificate of practice. Very, very important. The notification says CA holding certificate of practice, CMA holding certificate of practice, CS holding certificate of practice, and does this transaction or carries out this activity, then it becomes a reportable transaction. What is the transaction? Managing of client money, securities or other assets, management of bank, savings or security accounts. The next transaction that is covered, again non-core area of practice for all the three professional, organization of contribution for the purpose of creation, very important, creation, operation or management of companies. The point to be noted here is incorporating a company is a core service for a CS, CMA and CA. But operating and management of the companies is not a core practice area for all the three professional. Accordingly, point to be noted here is where there is a requirement for clarification from the Ministry of Finance, which we also expect from the Ministry of Finance, is that in case of creation, what is the reporting obligation of a professional? Because he is not going to report about any transaction. Is he required to report about the entity that he floated? And here it is not the organization of, it is talking about organization of contribution for the creation. The question here is whether incorporation activity, the practice area where we incorporate a company, is it covered under this notification, or only when we organize capital, because it does not even say capital, it says contribution. The word contribution is not defined under the notification, which requires a definition so that we can get the clarity what transaction to be reported. Whether should we report the incorporation activity of an entity, or should we report about organizing capital for the entity. So this has to be clarified. But however, if you are organizing any contribution, maybe it could be debt or equity, I think it could be debt or equity, both has to be reported for when it is used, when it is for the purpose of creation, operation or management of companies. Then the next activity which is covered as per May 3rd notification, where CA in practice, CS in practice, CMA in practice, if they are entering this transaction on behalf of their client, the same need to be reported. First one, that is the creation, operation or management of companies, limited liability partnership or trust. Very, very important here. The point to be noted here is creation, operation or management of companies. So according to my interpretation, CA in practice, CS in practice, CMA in practice, they may not be involved in management of company. Maybe they may become a director, that too an independent director, or they may not be involved in the day-to-day affairs of the management of company, because if they are in active practice, they cannot run business. That is what the professional ethics of all the institutes say. If you are in practice, if you are holding a certificate of practice, accordingly, this possibility of a professional holding a certificate of practice and also managing the company or limited liability partnership on a whole time basis may not be possible. But creating a company or creating a limited liability partnership is a core area of practice for a CA, CMA and CS who are in practice. In that case, whether the reporting obligation to the FIU is about the creating the entity and the name of the entity, what has to be reported has to be clarified by the Ministry of Finance, Government of India. The last transaction which is covered as per the May 3rd notification, wherein CA in practice, CS in practice, CMA in practice has to report, is buying and selling of business entities. They are using a word called, the government use under the notification, they use a word called buying and selling. It is not talking about compromise and arrangement or merger and acquisition or absorption or demerger or reverse merger. The question that here that need to be clarified here is these areas of professional practice of merger, demerger, reverse merger, hiving off, amalgamation, whether if the professionals are carrying out on the consulting basis, on a consultancy basis, or even when they are in CA in practice or CMA in practice or CS in practice, there are some professionals also carry out consultancy services other than the core areas of practice. In that case, whether if they are involved in this consultancy work, whether they are required to report the same to the FIU, that is the Financial Intelligence Unit, and what is the framework in which they have to report, again needs a clarification. So what we need to understand here is the many of the professionals in this notification came, they were all afraid that if CA, CMA, CS, everybody is covered for all the activities that they do. That's not the case. Only these transaction when the professional CA, CMA, CS they enter into, only these transaction has to be reported to the FIU. So it is a reporting obligation only. Once you report, what is a positive thing is you are relieved of the liability because you report to the authorities. Moment you report to the authorities, to an extent you are relieved of the liability, because in future even if there is going to be investigation to be carried out on the entities that you floated or the activities that you carried out, because as you have already reported, the government has the data, and accordingly to an extent the risk can be mitigated by the professional. So what is the professional obligation? See, this notification is a very important step by the government, because as a country we have to increase our rank, increase our standing as at the global level. And even officers were saying that many of the countries were provided financial sanctions if they are not meeting the FATF. Accordingly, it is very important to benchmark ourselves with the best practices around the world. So considering it, it's a very, very important step. But for a professional who are practicing, the framework need to be developed to see to that what is a reporting obligation, what is the quality standards to be maintained for this purpose of reporting. All this framework need to be developed, and platform also to be provided to them so that the reporting becomes easier for the professionals in a click of a button. So this is a very important step that the government should also facilitate the professional, or rather ICSI and Ministry of Finance can work together to come out with a reporting framework. Beyond this, on May 9th, there came a notification, subsequent notification, which is also a very, very important notification to be noted by the professional, which is also affecting the professional as such. But in May 9th notification, see, it is not CA in practice, CS in practice or CMA in practice who is covered, because they are covered already on May 3rd notification. On May 9th notification, certain professionals are listed who are covered, and of course CA, CMA and CS is covered, but CA in practice, CMA in practice, CS in practice was not mentioned specifically. So what is covered on May 9th notification is that this is also notified by the central government under section 2 subsection 1 clause SA 6 under the Prevention of Money Laundering Act 2002. These are all some of the activities which are covered under the May 9th notification. Very, very important notification. The first activity that is covered under this notification, if any professional or individual carries out this activity, by default they will become a reporting entity. That's my understanding of this notification. The first activity that is covered here is acting as a formation agent of companies and LLPs. See, what is my understanding is that as the notification is not defined what is a formation agent, what we should understand, nowadays many platforms are developed. Those platforms are used for the purpose of incorporation of the companies, where the work is shared to the professional. My understanding, by interpreting this clause of this notification, formation agent primarily could mean the platform providers through whom many of the professionals get job, the incorporation work, or LLPs through which they act as a professional to incorporate a company. My understanding, these platforms are covered as the formation agent. However, the notification has not clearly provided. It calls for a definition from the Ministry of Finance, so that this definition can be a clarity for this clause. Second, acting as or arranging for another person to act as a director or secretary of a company. So, a partner of a firm or a similar position in relation to other companies and LLPs. Under this clause, anybody who is acting as a director or a secretary of a company or partner of a firm or similar position in relation to companies or LLPs, in that case, by default, those individuals will become or asked to report the activity. They become a reporting entity by default. The next clause which is covered, providing a registered office, a very important clause. For a long time, many of the professionals were benevolent in offering the offices for the purpose of incorporation of company, LLPs, many of the business entities of a client. But now, because of this notification, that is May 9th notification, skepticism has to be skepticism has to be exercised, and we have to check the background of all the client who use our office for the purpose of using the professional's office for the purpose of incorporation, because the notification requires you to report those entities. The third clause says, providing a registered office, business address or accommodation, correspondence or administrative address for a company or a LLP or a trust. So many a times when a client comes and says he does not have a place of business to do, many of the professional extend, whether it is CA or CMA or CS or some of the lawyers, they extend their office saying that you can incorporate your company here, let it be a registered office, later point of time you open an office and then you start your business. This instance is now covered under the notification. If at all any professional is offering their place of business as a registered office or business correspondence or accommodation, any of these activities mentioned under this notification, the same need to be reported. The point to be highlighted here is what was very interesting to note was accommodation. So this was very interesting to note. I really want to know what is the purpose of bringing the word called accommodation, because many a time professionals will provide their place of business for the purpose of registering or for the purpose of correspondence or for the business address, but it uses a word called accommodation. So I am really surprised how many professionals are involved in providing their office or their premises for the purpose of as an accommodation is a question mark. But however, I don't know the intent for which this word was included as part of this clause. Then the next clause which is covered is acting as or arranging for another person to act as a trustee of an express trust or performing the equivalent function for another type of trust. In all these cases, if they are appointed as a trustee or equivalent function for another type of a trust where they are appointed as a trustee, they will become a reporting entity. They have to report this activity to the FIU. Then acting as or arranging for another person to act as a nominee shareholder for another person. Even in that case, the nominee shareholder becomes a reporting entity, and what he has to report? He has to report the beneficial owner. In fact, in the presentation just concluded by the Ministry of Finance, what I observed was the attention was paid for a word called beneficial ownership, BO, because many a times there will be a beneficial owner but somebody will be a nominee, and of course these transactions are covered under the Prohibition of Benami Properties Act if it is a property transaction or any of the transaction relating to asset, but the same need to be reported upfront so that the government knows who is the beneficial owner behind the nominee. So with this intent, the government of India rightly has brought this notification at the right time to ensure that India meets the standards, benchmarks itself at the global level, so that the reporting obligation increases. Nowadays, most of the time before 10 years, crimes were mostly deductive in nature. Crimes will happen, after that the authorities will go, they will deduct the crime. But nowadays, the steps taken by the government in the past 6 years, diligent steps taken by the government by various departments shows that government is very, very clear that they wanted to prevent the crime happening, especially in the areas of money laundering, areas of relating to corruption. And in fact, if you read the intent of the legislatures also, it is Prevention of Corruption Act. Similarly, if you read the intention of the money laundering also, as per the act, it is Prevention of Money Laundering Act 2002. It is about preventing. So accordingly, to prevent this activities happening, because post happening of the event, it is very difficult to investigate. We see that Enforcement Directorate arresting various people involved in this crime, and they also were many of these criminals or accused who are accused of the money laundering crime. Mostly they don't come out of the bail, because in case of the economic offences, jail is a norm, bail is an exception. In case of the other criminal, if you see the criminal jurisprudence with respect to other crimes, it is bail is a norm, jail is an exception. Because in 2016 there came a Supreme Court judgment which very clearly mentioned as an observation, economic offences are the crime against the society. Because this observation has to be understood, because if this economic crimes are not curtailed, this will affect the financial architecture of India. Because of that, India cannot progress, or over a period of time cannot benchmark itself to the global standard, and resulting to that, the bank's quality, the financial inclusion has to be brought in. The standing of India will go up at the global level. So considering all these requirements, there is a global call today, and the government of India is rightfully notifying the professional who are the gatekeepers and who are designated non-financial business and professionals. Under that category, we become the gatekeepers for most of these transactions. Accordingly, it is very important, when we are gatekeepers, when we are watchdogs of this transaction, as per the Kingston Cotton Mills case, chartered accountants or watchdog are not bled out. So accordingly, when we are watchdogs, and when professionals look at this transaction, and when we are not able to judge whether this transaction is money laundering transaction or not, it is better to comply with this notification and report all the transaction which is entered on behalf of the client, so that we are at least to an extent relieved of the liability, and we promote transparency with respect to the professional. So it is all about transparency being brought into the system. It is helping all the professional, an excellent step by the government of India, wherein the reporting obligations are brought for certain activities and for certain transactions. Of course, it requires clarity from the government with respect to certain terms, with respect to certain definition. I am very sure that the government of India, Ministry of Finance, will clarify this notification over a period of time. Considering this is a wonderful step taken by the government, not to criminalize, not to penalize, not to prohibit the professionals from entering into the transaction, but to bring transparency, but to ensure that the professionals are not brought under the liability unnecessarily in the future because of money laundering activities. Thank you so much for this wonderful opportunity. I tried to deliberate on both the notification in a detailed manner. In fact, last week I deliberated this in the Southern India Regional Council for more than 2 hours, because the issues are multiple level. What is the obligation of the reporting entity? How it has to be reported in the FIU? What is the role of the FIU? What are the transactions which are connected in the FIU? For example, there is a STR where need to be reported where the transaction is more than 10 lakh rupees. But if it is integrally connected, even by integrally connected, if it is more than 10 lakhs, the same need to be reported. So there are many more obligations under the FIU, but we need to understand in this kind of transactions that is mentioned as per May 3rd notification, May 9th activity, irrespective of the threshold of the transaction, any amount of transaction has to be reported. So it is a completely a separate code, separate process to be followed by the professional. Very important as per May 9th notification, which I missed to enlighten. As per May 9th notification, if a professional, that is chartered accountant, cost accountant, company secretary, who is engaged in the formation of the company, is exempt from reporting to the extent of filing only declaration form. Very important development, Rupanjani ma'am, because this has to be noted by all the professionals across the country who is watching this program. The Government of India, the Department of Revenue, Ministry of Finance is very clear. As per May 9th notification, if a professionals are involved in incorporating company and they sign a declaration form, they are exempted from reporting the creation of the entity activity under the May 9th notification. It's an exemption provided under the explanation to the notification. Second important activity which is exempted, any activity that is carried out, very important, any activity that is carried out as part of any agreement of lease, sublease, tenancy, or any other agreement or arrangement for the use of land or building or any space, the consideration is subject to deduction of income tax if the payment is made after deducting TDS, step 1. 2. If there is an agreement in place for lease and sublease, then that activity need not be reported as per May 9th notification. So second exemption, if it is going to be a rental agreement where people have letted out the commercial space, accordingly they need not report the activity. Third important activity which need not be reported, the exemption, any activity carried out by advocate, chartered accountant, cost accountant, company secretary, of course in practice, who is engaged in formation of company, which I already told you, to the extent of filing declaration form, is exempted from reporting. Any activity which falls within the meaning of the intermediary need not be reported by the professionals as per May 9th notification. So the impact of Prevention of Money Laundering Act with respect to May 3rd notification, May 9th notification is that all these activities, all these transactions are mentioned or rather notified under section 2 subsection 1 clause SA. Now let us understand, before I conclude, what is section 2 subsection SA clause 6, very important. It says persons carrying on such activities as the central government may by notification so designate from time to time. Very important. So whether May 3rd notification and May 9th notification, only those activities and financial transactions will be covered forever, or the central government has the power to notify more activities and professional? Answer is yes. In fact, what I expect is in future even notary public could be brought under the notification. Even notary public could be brought under the notification, because many of the times with respect to the real estate transaction, as I see that there is a high risk with respect to real estate transaction, possibly the Government of India or Ministry of Finance, Department of Revenue, over a period of time bringing out a framework for the notary public or the Commission of Oaths, they may also be brought under this notification over a period of time. For example, to bring more people under the inclusion. So it's a ever evolving process. So accordingly, as per section 2 subsection 1 clause SA 6, more activity and transactions and professionals will be notified over a period of time. As the FATF brings out more developments at the global level, I am very sure India will start catching up with those developments to see to that the reporting obligation increases. So accordingly, May 3rd notification, May 9th notification, in summary, brings a reporting obligation for the professional. CA in practice, CS in practice, CMA in practice, and many other activities they carry out, which is mentioned as per May 9th notification. Accordingly, it is not alarming, it is not criminalizing, it is not prohibiting, it is not penalizing the professional, is the conclusion, my dear members. Thank you so much for this opportunity. Thanks to Institute of Company Secretaries of India, thanks to Ministry of Finance, Government of India for this wonderful program, where we had an excellent deliberation by the officials of the Ministry of Finance, where they provided entire gamut, what is all about money laundering, what are the activities covered, what is the risk area, what is NRA. So it's an excellent initiative. Thank you so much, ICSI and the leadership of ICSI and the officials of ICSI for putting out this program here for the benefit of the members across the country, across the world. Thank you so much.